Hey, everybody, we're going to talk about Social Security taxes today. Before we get started, please take a minute and click subscribe to my channel if you don't already. And the best way you can support this work is to check out the message from our sponsor, The Motley Fool, you see on your screen, fool.com/Frankel, where you can get the 10 best stocks to buy right now. So, Social Security tax depends on two factors. One, the Social Security tax rate, which is 12.4% right now, but you only pay half of that. So 6.2% is paid by the employee, and the other half is paid by your employer. Now, not all income is subject to Social Security tax. There's every year, and this is adjusted for inflation every year, there's a taxable maximum. In 2023, the Social Security maximum taxable earnings is $160,200. So any income above that is not taxed for Social Security purposes at all. So when you combine those two things, so 6.2% of $160,200 is about $9,932. That's a maximum Social Security tax you could possibly have to pay in 2023. However, for self employed people, like I'm one of them, you have to pay both sides of the tax, the employer and the employee side. So your effective rate is 12.4%. So your maximum Social Security tax for the year is double that amount. There's a good chance that Social Security tax will change significantly in the future. Um, to make a long story short, Social Security is not on the best financial footing right now. It is running a deficit and is expected to do so for the foreseeable future, and all of its reserves are expected to be exhausted by 2034 at the current pace. So, if nothing's done, Social Security is not in the best shape. So, one way to increase the long term viability of Social Security is by increasing tax revenue. There are a few different ways that that could happen. There could be just a hike in the Social Security tax rate from, say, 6.2 to 7.2%, which would likely be phased in over a period of time. We could raise that taxable maximum earnings from 160,000 to something a little bit higher. That would also help to increase tax revenue. We could eliminate that taxable maximum altogether and make that 6.2% tax rate apply to all income. Or, and this is one that's been gaining traction in recent years, we can leave that maximum where it is, but then create a new Social Security tax bracket, if you will, where any income over a certain threshold will also be taxed. So any income up to $160,000 to $160,200 would be taxed, and then say over 400,000, the tax would kick in again. So there's a lot that could happen over the next few years. Hopefully, you found that informative. Leave me any questions or comments you may have. I'll do my best to answer all of them. And thanks for listening. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.